Is property investment lending over for international property investors? Well, you will learn in this episode what's happening in the property lending market, as well as we're going to be looking at the property market as a whole. Over the last year, average prices in the UK have risen by 10.9%. The question is, will that continue for the rest of the year? Do we have a bust on the way? Welcome to the Momentum Property Education channel. My name is Daniel Wood. I am one of the founders of Momentum Property Education, and I'm very excited to invite you here. Every single Tuesday, we look at the property market and see what is going on, what is happening in the property market right now, and what do we need to do as investors to stay safe and prepared for the coming years. Make sure you subscribe to the channel if you want to make sure that you are investing in the right type of deals at the right time to succeed and build a successful property portfolio. So let's start by looking at the property market. Let's look at the factors that have pushed up the property market by 10.9% in the last year, and let's see what we can find out about what's happening going forward. So what's made the property market rise to this level over the last year are a couple different factors. Obviously, you noticed that COVID happened. But as a response to COVID, the UK government put in a lot of different actions. First off, they removed stamp duty. They gave us a stamp duty holiday. That started pushing up the prices and keeping that demand going. The second factor that came in was when they changed the lending for first-time buyers, first allowing only 5% deposits, and then changing the lending product to allow up to 45-year mortgages. What this did was basically it made housing more affordable for people, allowing them to bid higher on the prices. So that drove the prices up. Those were the domestic factors going on in the UK. In addition to that, in China and Hong Kong, the regulations in Hong Kong were sped up. They have had a plan of how Hong Kong is to be incorporated into the Chinese economy. They just increased the pace of that, which scared a lot of people in Hong Kong, making them want to get their money out of that economy, and a lot of them moved their money into the UK economy. So that with the pent-up demand that was happening in the UK, that increase of international purchase really created a uplift. Now though, that these different measures are starting to run out. Furlough, which was propping up because a lot of people were without a job, right? They didn't have anywhere to go. The government was giving what's called furlough pay, meaning they were paying 80% of people's salaries when they were home and not had a place to work. Because of that, the economy didn't really feel the effects of COVID. Now, furlough is starting to end. Stamp duty holiday is ending at the same very soon as well as these other measures. A lot of things are now changing in the market. So the question is, what will be the effect? What will this do? Well, first, let's look at the furlough, because that's been a lot of economists. If you listen to economists, they will have told you that we're probably going to see a bust after the furlough pay stops, because furlough was incredibly high. About 25% of the UK workforce was on furlough. That being said, in most economies in the UK, historically, they've been at, 5 to 7% unemployment. So add on 25% from the furlough once furlough ended, and that would have been a huge, huge problem for the UK economy. Now, that didn't happen. We're not seeing that, because now that things are opening up in the UK, people are coming back to work. And the latest prognosis by NatWest is that we will have about 6.7% unemployment post furlough, which is not very much higher than the 5.5% that the UK had prior to COVID. So it is an increase, but it is not as dramatic. What we also see is the amount of jobs being created is increasing. It's actually right now, open job listings are 18% higher right now than they were pre-COVID, which means that more people are going to be coming back into the workplace. So these factors are really having an effect, and people are coming in. One of the driving factors of this, there are multiple factors that are driving it, but one of the big ones is that people are coming out and they're spending now. The spending is, according to the CHAPS, which is a metric that's used, it essentially says how much are families spending on retail and how much are families spending. It's up to about 96% of pre-COVID, meaning individuals and families spending is about the same as it was pre-COVID, meaning we are getting into a good place for businesses to be able to grow and come back to their level. Now, the UK government has been borrowing heavily, and now in April, to sustain this, in April we had the second largest deficit in UK history. It was 31.7 billion pounds. The only time that's ever been higher in the history of the UK was last year, last April, and at that point it was about 33% higher. So we are having troubles with the UK economy, and that is why we are also seeing a lot of inflation in the market. The inflation so far this year is 1.6%, which is very, very high considering that you look for annual inflation to be at around 2%. So we are on pace to having a very, very high inflation. Now, the Bank of England believes that this is just short term. As things open up, people want to spend on retail, so retailers are raising the prices. And there's also a big supply and demand issue that we will be coming back to at the end of this video. We're going to talk about the supply and demand and what's happening to build costs as a result. So as we see now, inflation is very, very probable. The prognosis that I made pre the latest numbers that I was doing a couple months ago was essentially one of two things were going to happen in the market. Either the UK government would have to stop its quantitative easing and the market would crash. The second alternative was they would keep the quantitative easing long enough to get people back into employment, but it would turn out that they would be spending too much money and printing too much money, which would cause inflation. Now, it looks like they've spent long enough that we're not in a crash, but it looks like inflation is coming. And if inflation comes, that can be really, really good for us as property investors. Overall in the economy, high rates of inflation, 5–10% are very, very believable in the space we're in. That can be a huge, huge problem for the economy as a whole. But for us as property investors, it can actually be really, really good. One of the reasons for this is that property generally goes up more than inflation, but at least as inflation, because it's one of those things people spend more on. So what will happen is if we have inflation, the property market will go up. But if you're borrowing money, so if you bought a property, say £100,000 property, and you've borrowed, let's say 70% loan to value on it, well, if the value goes up, the loan doesn't, right? The loan stays the same. So you're actually getting extra equity. So inflation can be really good for property investors. The one bad part of inflation is that the government will want to stem the inflation. Now, we know they can't do it right away. They don't want to slow down the economic recovery, but they will have to at some point. And the way they do this is by increasing the interest rate. That causes interest rate on bank accounts to go up, so on your savings, and it causes your costs to go up on your mortgage, etc., which means that people start putting money into their bank account instead of spending it. What that will do, though, for us as property investors is if you don't have a fixed rate mortgage, your interest rates could go up and that could severely damage your income. So what I'm doing, this is not financial advice, this is what I'm doing. I'm trying to get as long fixed rate mortgages as possible. We're currently refinancing an 11-bed HMO we own in Prenton, and we're looking at a 5-year fixed interest loan. We see that as at the least we want to keep ourselves safe and in these times. So that is what I'm doing. It's not financial advice, but that is what we see is inflation is probably around the corner. Now let's go to our second headline here today, which is lending for internationals. One thing that has been happening lately is the insurance industry has been shook up, and a lot is going on in the insurance industry. One of the things that has happened is that a lot of brokers, mortgage brokers, when they come now to renew their indemnity insurance, they are not allowed to lend to internationals. The insurance companies are saying, we will not renew your indemnity insurance if you're going to work with international investors. That effectively is cutting us out of the mortgage broker industry. Not all insurance brokers are doing this. It is something we're looking into, which are not, but it could be a major problem. So it's something we're going to keep a close eye on to make sure that that doesn't happen. The other question that we don't yet know is what are the insurance companies doing with the actual lenders themselves? Are they going to keep offering them that indemnity insurance for internationals, or are they going to stop it? We do not know yet, and that will be shaken out as time goes by. We know the UK market really needs international investment, so we don't believe this will be a long-term problem. But make sure you subscribe to our channel so that as we learn more, as we see how this plays out, you know what is going on and what is happening in the market. This is very, very important. Finally, I want to talk about the cost of building in the UK. We had in our Facebook group, the International Property Investor Facebook group, we had a post come out where a builder had raised their quote by 33%. Now that comes back to the supply and demand, the supply shortages right now. Because the world is opening up, the production has been low for the last year. Now all of a sudden the demand is off the charts because we've all been waiting for a year to get things started. That has caused a supply shortage, which obviously means prices go up. Certain materials like wood has gone up by almost 80% the cost, others by a lot less. But overall, this is a problem where we're seeing builders increase their quotes just to be able to keep them profitable by 10, 20, even 33%. So this is something that's happening right now. Most experts believe this is short term, that production will get started again, will catch up, and the market will come back to normal. But right now, in this window we're in, that is an issue that we have. So we are looking at this right now, and we will keep a close eye on these developments. So again, make sure you subscribe. Thank you so much for listening to this video. And please share in the comments below, what are you seeing going on in the market? What is your guess and estimate for the future? And what are you seeing from builders? Thank you so much for joining us here today. My name is Daniel Wood. Thank you for joining Momentum Property Education. And I'll see you again Tuesday next week with next week's property market update.